Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, we're going to talk about what's the probability, the likelihood that the Bank of England will cut rates this Thursday. There's a lot for the case. There's a lot against the case as well. We've got new data out this week, which we want to give you both sets of data so you can just really understand what a difficult decision it is this month. In fact, I think it's probably one of the hardest decisions, but I'm going to let you know at the end what I think I would do if I was in their situation. So before we jump into that, if you're new around here and you haven't done it already, we're a property channel that has all the property news, house prices, interest rates. We talk about property investing and much, much more. And that's a great reason to subscribe to the channel over here and hit that bell notification so you get notified of all the new content. And let's make sure more people watch this video by smashing like, tickling like, doing something to that like button. That really helps with the YouTube algorithm, and that's how we get more views on the channel. So take a moment to do that if you can. So this is a difficult decision for the Bank of England. We had high inflation, didn't we, for such a long period of time. It's years that we've been talking about this inflation now. And right now, the Bank of England is a little nervous that inflation might be roaring back. Now, that's not good for anyone, and it really hits people on lower incomes the hardest because they just don't have disposable income to be able to afford these increases in costs. So in the summer, let's talk about the target. So the target's 2%, as you probably know, and they have some flexibility on that. You know it's not going to be bang on 2% every single month. It isn't a problem if it goes to 2.5 and then it goes to 1.5. It's in a band. So they want to keep it around 2% as an average for the year. Now, this summer, just gone, we dropped all the way down to 1.7%, which was good. And we had very good momentum then, and lots of people felt things were moving in the right direction. But we went from 1.7, so this is the target, and the inflation went from 1.7% all the way back up to 2.3%. And that's where we're currently sitting. We got new inflation data out tomorrow, Wednesday, the 18th. And so we've got this period now where we're looking, inflation is creeping back up. So what is the likelihood and the story that we're going to hear tomorrow? Well, we're going to hear a few things. We're going to hear that tobacco is causing a problem. I'm going to talk about that. We're going to talk about energy, which has been the bigger problem for a while. And we're going to talk about groceries as well. So tobacco's gone up because of the budget. It goes up every single year. Now, if they feel that that's going to have an impact on inflation enough that it's going to be talked about in the data, then don't increase it so much in that budget. Let's try and keep inflation down by not raising the tobacco costs for once, or doing a smaller increase. Energy costs are outrageous in this country. You can look at the data. It's been circulated a lot online recently. We are the most expensive energy in the whole world. And a lot of places we pay 4 times the price that they do, even though other places in Europe get the same wholesale prices as we do. So what happens? Where's that mismanagement and extra cost coming? Well, the government aren't really doing much to the energy companies to incentivize them to be more efficient and keep costs down. They don't really do anything. And so that means that they're making record profits and we suffer. Then these energy costs hit businesses. For example, there's a fish and chip shop over the road from my office here, and his energy costs went from £1,000 a month at one stage when the energy was at its peak to £6,000. Like, that's insane. He had to literally turn off one fryer. He had to turn off and take out light bulbs in certain places, not heat as high. Like, it was insane, and he really struggled to survive. He doesn't make £5,000 net profit every single month. So energy costs are coming back. That's going to hit those businesses really, really hard. Grocery costs are coming back. That hits the poorest people in society yet again. And so these things are creeping back up, and the expectation is, so the prediction is that tomorrow, most places are saying 2.6% inflation. So it's still in that band. It's an average, but it's big jumps. And these aren't small little jumps, are they? From 1.7 to 2.3, 2.3 to 2.6. These are hefty jumps. Now, none of these jumps are anything that the consumer is doing. So normally you get inflation because people are going, well, the government is printing money. That's what causes the inflation. But the talk is that you increase the interest rates to curb spending, but we're not overspending. We're really tightening our belts, and we're still getting this crazy inflation. And all of it, literally all of it, is stuff that the government isn't doing anything to solve. Now, wages are also going to be talked a lot about. The wage data is already out. And so wages are up 5.4% on an annual basis in the private sector. In the public sector, government jobs is 4.7%. They had good pay rises there. Private sector is surprising people that it's gone up so much. That is just something that has happened. Now, that is good for those people. Fair play to them. They need to get pay rises because their net worth, the cost of living has been so hard. They need to catch up a little bit. But the Bank of England doesn't look at it like that. They will look at this data and say, this is worrying for us. This could cause more inflation. People get more money. They will then spend more money, and that will keep this inflation going for a prolonged period of time. Now, here's something else that you might have missed that is going to really keep this wage data even higher for longer. Because in April, the minimum wage goes up and the national insurance contributions goes up. So how much does that add on to the living wage? So in April, the living wage, which I think should go up because it's hard to live, especially in places like London, the living wage is going up because of the government's budget, 6.7% in April. So how do we ever get this inflation down if all of these things that we're not doing, like we're not putting the living wage up? I do think it should go up. I think it's fair that it goes up. But then you're penalising us saying, well, inflation's still too high. I can't bring interest rates down. I can't support you on this. I'm going to have prices going through the roof, making poorer people poorer. It's really, really not great news at all. So the Bank of England has a decision on this. Now, there's one more little element that they've got to think about. Jobs. Jobs are in decline now. The job data came out that the wages are up, but 35,000 people in a month lost their job. 35,000 people unemployed in just 1 month. And this is seasonally a time where there are more jobs around in supermarkets, in warehouses, driving jobs. And we're still going down. Manufacturing is going down. This isn't a good sign for what's to come. Lots of big employers said when we are increasing the national insurance costs and the cost of hiring someone, we are going to need to do redundancies. And that is probably what you're going to start seeing on a month by month basis now. So the Bank of England has a decision. Unemployment is rising. The living wage is going up. That's being forced onto everybody. We've also got wages that are going up. We've got tobacco going up from the budget. We've got energy costs going up because the government are doing nothing. And now they've got to decide, do we cut interest rates to stop going into quite a severe recession? And the likelihood is this week, 91% of analysts expect a pause in interest rate cuts. You've had the European Central Bank has cut to just 3% their interest rates, and they're saying they're going to go even lower, maybe as low as 1.75% in 2025. The Federal Reserve are likely to cut rates again this week, but the Bank of England are likely to sit on their hands and not do anything. And my opinion is that they should cut rates. They should ignore the noise of this inflation rise, because the fact is that I think the recession that potentially could come at the end of all of this would be much more severe if you don't take action now. If you cut rates a little bit this month, they will still be restrictive, and that will start easing the pressure a little bit. And it takes a long time for that rate cut to feed through into the market so people actually feel the benefits. Months and months and months. So there's a lot to consider here. A lot of this is totally out of our control, and it is from the budget. A lot of stuff that happened in the budget is now starting to bite and cause more inflationary pain for everybody. Let me know your thoughts, questions, opinions, or observations in the comments. Do keep it polite. Do smash like, do share this video, and check out all the other content on my channel, including this video right here.